Welcome to The Explainer. Today, we are pulling back the curtain on something called ethical investing. It's this idea that's kind of blown up from a tiny niche concern into a massive force in finance. And we're going to figure out what that really means for you and for your money. And this quote from fund manager George Unwin, it really gets to the heart of it all. It's this growing desire to know that our money isn't just, making more money, but that it's also doing some good out there in the world. Or, at the very least, that it's not doing any harm.
It's a huge question, right? And it's one that more and more of us are starting to ask. The answer to that question is completely reshaping the entire investment world. So let's get into the key ideas you absolutely need to know.
Okay, so to really wrap our heads around this, we've got to learn the lingo. The terms themselves have actually changed a lot over time, and the differences between them are super important for understanding this whole movement. So where did this all begin? Well, it started with a really simple idea, just avoidance. In the early days, ethical investing was all about making a do not invest list. It was basically drawing a line in the sand and saying, nope, my money is not going to support this. But pretty soon, just avoiding the bad guys wasn't really enough. The whole movement grew into what we now call socially responsible investment, or SRI. And this is a much, much bigger idea. It's not just about what you don't invest in. It's about looking at a company's total footprint on the world. And this is where the strategy takes a really fascinating turn. We start to see this fundamental shift, moving away from just playing defense to a much more proactive and, honestly, a much more powerful stance. You can see that evolution right here on the screen. The old way, it was all about exclusion, a simple no to certain industries. But the new way, it's about integration. It's a way smarter approach, asking not just what bad things are you avoiding, but what good things are you actively doing to build a better, more valuable company for the long haul. And the engine that's really driving this new way is this powerful concept, corporate sustainability. And look, we're not talking about some glossy PR report here. This is about a core business strategy that weaves economic, environmental, and social goals right into the DNA of how a company operates. Okay, so what does a truly sustainable company actually look like in the real world? How do you tell the difference between the companies that are genuinely committed and the ones that are, just talking a good game? Well, luckily for us, there's a playbook for this, and it comes from the Dow Jones Sustainability Indexes. It all breaks down into 5 key pillars. First, there's strategy. Is sustainability just some buzzword for them, or is it actually baked into their long-term plan? Second, financial. Are they making good money, and are they totally transparent about it? You've got to have both. Third, customer and product. Are they making things that are innovative and good for people and the planet? Fourth, governance. How is the company run? Is it ethical from the very top down with real accountability? And finally, pillar number 5, human. How do they treat their own people? See, a truly sustainable company has to be nailing all 5 of these.
Now, this all sounds great in theory, but how can we as investors actually check that companies are following this playbook? How do we measure all this stuff and hold them accountable?
Well, the answer lies in these specialized stock market indexes. You can think of them like independent referees in a game. They're so important because they set the benchmarks, they demand transparency, and in the end, they give you a clear list of companies that actually make the cut. They basically do all the heavy lifting and the hard analysis for you. 2 of the biggest names you're going to hear in this space are the UK-based FTSE4Good and the global Dow Jones Sustainability Indexes, or DJSI for short. These are pretty much considered the gold standards for finding and tracking the world's leaders in corporate sustainability. So here's the bottom line. These indexes give us a data-driven way to make sure our money lines up with our values. They let you cut through all the noise, all the marketing slogans, and get a really clear picture of which companies are truly walking the walk. So this huge shift from just avoiding bad companies to actively seeking out good ones, it's definitely here to stay. And it leaves a really critical question for every single investor out there. As this new world of finance keeps growing, how will you balance your principles with your portfolio?